Hey, good morning, everybody. Welcome to another day of the Market Report brought to you by Mike Bjork. Today's Hump Day, July 16th. We got a bit of economic news to go over today. We'll start right into it. We'll have the Producer Price Index. This is the wholesale inflationary index that's out there for the month of June. So back in May, we had a reduction of negative 0.2%. And the forecast was supposed to go up 3.3, and they actually exceeded that to zero point 0.4. So we are seeing a bit of improvement on the inflationary levels. We're actually about 1.9 year over year. We're back in February. It's actually 1.2. So it had a big jump in the inflation numbers. So we are approaching those levels that the Fed kind of set of 2%. Now they don't look necessarily at the wholesale numbers. They look at the CPI and the PCE reports. PCE has a little bit more index. They tend to be more their favorite of the two because those are on the consumer levels of what the consumer pays. Now, cost of goods could go up on the wholesale level, but they don't always pass that cost on to the consumer, which is the reason why it's not as important as the consumer level inflation numbers. Just so you understand there. Now, next one we got here is industrial production for the month of June. So May we had a 0.5% increase in production, and the forecast for June was zero point 0.3, and they came in at 0.2%. So a little bit under forecast, but we did have an increase in the production. So not bad numbers there. And capacity utilization, this is kind of somewhat inflationary numbers, but it's kind of talks about how productivity levels are in the workplace. And we had 79.1%. Forecast supposed to have a slight uptick, and it basically remained at 79.1. So decent numbers there. Now, this is a number we've been wanting to keep an eye on because home builders index, this is the confidence level for home builders. It was kind of decreasing there for a while, and as you can see, it looked like it jumped up a little bit. And so this is the best we've seen in about 6 months. So we actually contracted back in June, and forecast was supposed to come to 50, and it jumped up to 53, which is great right there. And then later today, about 11 o'clock Pacific Standard Time, we'll have the Fed Beige Book. This could create a lot of volatility out there as it's kind of the notes and kind of more information of what the Fed's thinking when investors get to take a look at this, what the Fed's thinking in terms of what's going on around there, and maybe give them more clarity or insight as to are they thinking or is it on the table about potentially raising interest rates sooner than expected. So we're going to jump over to the headline news here, and the stock market's currently up. A lot of it has to do more with earnings reports coming in better than expected. We got some M&A deals that are being brought to the table here, so that's what's kind of generating the stock market today. And then Yellen is on her second day of testimony with Congress, so this will be the last final day. And today she has more of a softer tone, which is the reason why the stock market's a little bit better today versus yesterday, because there's mentions of there's concern that maybe she thought evaluation of stock market was maybe too high, and of course, stock market pulled back as a result. We also had have Fed member Fisher speak today, and he's a pretty hawkish member. He's out of Dallas. Some friends of mine out there like to call him loose lips because he's pretty free, speaks pretty freely about things, and he can potentially, he is a voting member, so he could potentially roil the markets. Now, one of the he did speak earlier today at USC, and one of the things he did make a comment about was that not only does he think they should stop the purchases of the mortgage-backed securities of quantitative easing in October, but the reinvestment of that in October. He kind of views it as either still spurring or potentially having inflationary problems if we continue that and try to head it off at the path before it gets to be a problem. So that's his line of thinking and what he's kind of stating. And it'll be interesting to see if the Fed will follow suit with what he says. What the Fed is, they're stopping their purchases of mortgage-backed securities, but they are continuing with their reinvestment. Now, would that still be on the table, or are they going to pull back on the reinvestment? That will be another, probably bring up some important issues or important topics we're going to probably listen to for the next Fed meeting if they will be pulling that or touching that reinvestment. All right, so be prepared for statements in that regards as well. Another item here to note is Chinese growth rate increased to 7.5%. So Europe and Asian stock markets doing well as a result. So, but there's questions as to is the Chinese government will be doing more to stimulate their economy or not. So let's go ahead and take a look at what the bond market's doing today, and we pulled back. So we're about the same where we left off yesterday. So we've been down the 102.02 range. of late. So really, we haven't changed. As you can see, we're still in the low 102 range, and we really haven't made any changes. So the pricing today is about the same where we left off yesterday in those terms. All right, folks, thanks again for watching. I hope you guys have a wonderful day, and we'll look forward to seeing you guys tomorrow. Have a great day.